Guys, welcome to today's class. In the last class, we were talking about the different reversal patterns, right? And today I'm going to cover the last reversal pattern. Then I will talk about continuation pattern, right? So now the last reversal pattern I have not talked about is called a wedge. We have rising and falling wedge. Now a wedge. This is how a wedge looks like. Something like this, right? Then it's like this. This is how a wedge looks like. Now let me go to Google and show you images of how a wedge is in real life, right? So now these are wedges. These are different wedge, right? Look at them, images of what a wedge is and what it is used for. As you can see, the different images of how it is used in carpentry and the rest. But in trading is it's just a simulation of how it looks like, right? That is why the name is called wedge, right? So now it has, look at, if you observe this, price rallies up, right? Then it begins to retrace, it begins to range, and as it's ranging, the candles are reducing in size, and going into this narrow range, right? Before we have a breakout, right? Before we have a breakout, right? Price is being compressed into this narrow range. Like I said, price rallies up, right? Then price begins to get compressed in this narrow range, right? As you can see in this diagram, like I just explained before, it breaks out. Now, one thing about a wedge is that it can break out in any direction. It can break out in any direction. Wedges are reversal patterns, and this is the last reversal pattern I will talk about before I go to continuation patterns, right? So these are more examples of wedges, right? A wedge, it can either go up like this and range before it breaks out in any direction, or it can go down. Price can go down like this. Price can go down and range into this narrow point, then break out in any of the directions, right? So these are just some other examples to help you understand better. This is one example. This and that example. And remember, in wedges, right, what we are looking for is the breakout. Remember when I was talking about the head and shoulder pattern and the double tops and double bottom pattern, our point of interest is the point where it breaks out. For head and shoulder, remember, it's for neckline. For double tops and double bottom is also for also neckline, right? Then in wedges, we are looking for when the price. This is how it looks like, right? Price is ranging there. We are more interested in when price breaks out. The moment you notice price have broken out from this wedge, either up or down, that is where your entry is, right? Now, from this image, you can see that it said breakout confirmed on a close above resistance, right? That is this one, which is our entry for buy, right? Then in this case, notice that price went down, then formed this wedge. It ranged there. And one peculiar feature about wedges is that price will be from big candles. The candles continue to reduce in size until it forms. It's just like price is converging into a narrow range, right? Then once it is done converging, price once it's done converging, there's going to be a breakout, and that breakout is your point of interest, right? So this is an example for downtrend where the market ranged here and broke out here. This is an example for uptrend, right, where the market went up, formed a wedge, falling wedge, right, and ranged here. Now this one, it can break out in any direction, like I said before. So you just need to keep watching for the point where it will break out, right? So if you see a rising wedge, what it just means is that the price will fall. Then if you see a falling wedge, it means that the price will rise, just like I showed you in the examples, right? This is a falling wedge. Falling wedge in the sense that price is going down, down, right? Price will rise. Then if it's a falling, if it's a if it's a falling wedge, price will rise. If it's a rising wedge, price will fall. Just like this. Look at this. This is a rising wedge. Price fell. If it's a falling wedge, just like this, price will rise. Right? So it's very easy. This, like I told you, is a reversal pattern. Falling wedge is very, very easy. If the wedge is facing down like this one here, it's a falling wedge. If it's a rising wedge, it's going to be facing up. What it just means that price will go in the opposite direction to where the wedge is forming, right? So your point of interest is to mark out and be waiting for breakout in either the falling wedge or rising wedge. Before we go to the next topic, which is continuation patterns, we'll go to our MetaTrader app and see, as usual, if we can find practical examples on our MetaTrader app so that it will be easier for you to understand, right? So this is just the same thing. When the wedge is forming, it forms support and resistance, right? Or support and resistance, whether it's rising wedge or falling wedge, it forms our support and resistance. So you just need to mark those points and wait for a breakout. So let's go to our MetaTrader app and look for examples of rising and falling wedges. Okay, we are going to check USD card first, right? So let's invert our phone. Let me invert my phone so we can have a better view, right? Invert my phone, yes. So I've inverted my phone. So now remember, we're looking for rising and falling wedge, right? So I think this is an example. Look at this. I'm sorry about that. Okay, let's continue. This is an example. Look at this. If you draw this now, right? Then notice that price started ranging into this narrow range before there was a breakout at this point and price went up. So we can see that this is a falling wedge. And remember, when I said when we have a falling wedge, it means that price will rise up, right? So when anytime you want to do analysis, you bring out your bear chart like this. You begin to look out for points you can, things you can use, technical analysis tools you can use to help you understand what is at play in the market. Whether you want to check for chart patterns, whether you want to check for support and resistance, or Elliott waves, or Fibonacci retracement, all these tools I've been teaching you. It is for you to be able to integrate them and know which particular pattern is at play so that you can be able to make good trading decisions, right? So now this is an example, like I just showed you, an example of what? Falling wedge. Falling wedge. This is where it broke out, and look at how price went up, right? Let's look for an example of rising wedge. We have seen for falling wedge. Let's look for rising wedge. Falling wedge, rising wedge, right? Falling wedge, and remember, when it is falling wedge, price will go up, like you can see here. When it is rising wedge, market is going down and it forms a rising wedge. Just means that what? Price will fall, right? So now let's look for, we have seen for falling wedge. Let's look for rising wedge. Rising wedge that will cause price to rise. Okay, I think I've seen an example. Look at this. The market was going down, right? And it's still ranging into this particular narrow range, right? I noticed that after some time it broke out from here and went up. So for falling wedge, price will rise. Then for rising wedge is like this, price will fall, right? So let's check for more examples so that we can have a better understanding of this particular chart pattern. Okay. I can't find any example here. Can't find it. I can't find another example on USD card. Let's go to another pair and see um if you can find rising and falling wedges, right? Let's try gold and see if we see anything in gold. If we find anything in gold. We keep scrolling until we find. Remember yesterday when I was teaching about double tops. This is another example of double tops. Look at it, right? Perfect M. Yeah, remember our neckline. Remember, see how it broke out and went down. But we're not talking about that now. We're talking about looking for rising and falling wedges. Let's keep checking. We should be able to find one or two. Another thing you need to take note of is that all these patterns don't happen all the time. That is why you need to have all these different technical analysis tools in your mind or your trading arsenal, so that you know the one to put or to know the one to use, because the market condition is not permanent. This week it can be Elliott wave at play. Next week it can be just support and resistance. Another week can be head and shoulder pattern. So you just need to know all these things so that you know the one to use, right? Know the one to use. Like for gold now, what is mostly at play, if you can observe, is mostly double tops and double bottoms. Mostly double tops and double bottoms. And let's check another pair. We have checked USD card, I've checked gold, we can't find. Right? Let's check EUR JPY and see if we can find a rising or falling wedge. Let's check. I remember, one thing you need to do is don't force any pattern. If it is not the pattern, it's not the pattern, right? Because one mistake I used to make before was trying to force either support or resistance, or force a pattern. If what is at play in the market is not the pattern you are suspecting, leave it and try and find out exactly what is at play, right? This market too is mostly double tops. Mostly double tops that's at play. Mostly double tops that's at play. I think this one can work out. This is here, right? Price rallied here. So this is a falling wedge. And remember, a falling wedge, what will happen? Price will go up. So we have seen for falling wedge here. We're looking for rising wedge where price will fall. I've seen for falling wedge where price will rise. We're looking for rising wedge that will cause price to fall. Rising wedge that will cause price to fall. Even here too, look, observe. Still double top pattern. Double tops. Let me check one last time. rising wedge that will cause price to fall. I think this can play, right? This is this. Then price went up like this, right? This is a rising wedge. I can observe that at this point, price went down. So we are able to see example of falling wedge. Remember, falling wedge is like something like this, where price will rise up. The rising wedge is something like this. Rising wedge something like this, where price will break out and fall down. So I'm going to give you examples, practical examples of rising and falling wedges, right? So now we'll go back to reversal. We are done with all the reversal patterns. We have covered head and shoulder. We have covered head and shoulder pattern. Head and shoulder pattern, right? We have covered double tops and double bottoms. That is for reversal patterns. Reversal patterns, right? Reversal patterns. We have covered rising and falling wedges, right? I've covered rising and falling wedges. As you can see here, rising wedge that falls and falling wedge that buys, right? So we're going to cover this, and let's go to continuation candlestick patterns. Now, continuation candlestick patterns are patterns that occur when, let's say, the market is buying, right? They occur for a period of time, and the market does not change direction like we have in wedges. The market continues in that particular trend, right? In that particular trend. So those wedges, we can call them retracement, but those retracements form a pattern that helps us to understand that this is what is at play in the market, right? So now for continuation patterns, right? For the continuation patterns, we have channels and rectangles, we have flags and pennants, then we have triangles. The first one we're going to be covering is channels and rectangles. So for the channels and rectangles pattern, it occurs after a prolonged trend. Actually, let's say the market has been buying for a period of time, and like I told you in our previous classes, no market will continue to buy or sell forever. There's a point it will reach that it must rest or it must retrace, right? So now in this case, let's say the market has been buying, right, for some time. Now, that period where the market is resting, in this case for channels and rectangles, as you can see in this diagram here, right? This period, when price has rallied up for some time and it begins to range in a particular rectangular range, like you can see here, it went up, came down, went up, it came down, went up, came down. That is to say the support and resistance are within a fixed triangle, that is to say box. That is just this. As you can see in this diagram, price rallies up, then this is a rectangle. Price begins to range inside, price goes down, comes to touch the support, touches the resistance, comes down to touch the support again, touches the resistance, comes down to touch support, like just like that. Now this is a channel or a rectangle. Now, as usual, we are waiting for what? We're waiting for a breakout on the upside, because what we are trying to observe here is a rectangle or a channel. Now, the moment price breaks that resistance, right? Remember, I said that there are two kinds of people, two kinds of traders. There are those that will enter it immediately and ride up, and there are those that will wait for it to break out and come back and retest that rectangle, retest that previous resistance and form a support and continue going up, like as we can see in this diagram here. This diagram here, where price broke out from the range and came back to retest and continue going up. So like I said, this is a continuation pattern. The moment price goes up, ranges in a rectangle, and does not go back up, it is not a rectangle pattern. If let's say it breaks out on the downside, it's not a rectangle. Even in this one here is for bearish rectangle, right? This is for bearish rectangle. Then this is for bullish rectangle. Sorry, and this is for bearish rectangle. As you can see here, price goes down after a prolonged downtrend, then enters into this range you are seeing. It's a point of retracement where price is retracing. So just like that, then this is another example. Remember, the price is ranging between support and resistance, right? Then let me show us more examples so I will understand better. Look at this. This is a stock. This is this NYSE means New York Stock Exchange. That's for those that trade stock. But this diagram is for just for explanation, right? Now look at this. Price bought for a very long period of time. Look at this first. Price bought here, entered into this range, went down to our support, our resistance, support, and finally broke out here and continued rallying back up and entered into another range again from resistance to support, resistance to support, resistance support, and like that broke out. So this is just how the principle works. You understand? Like I told you, in this case, if you observe in this point here, right, it broke out and came back and retested this black candle here and went back up. So even if you enter directly, you'd have still be making your money just like that, right? So that's just it. So in the examples above, I was explaining about for a rising market or a bullish market, right? Now let me show you an example of this is an example for a bearish market, right? Where the market goes down, enters into a narrow range, goes up, come down, goes up, come down between our support and resistance, and then breaks out on the downside. Remember, I said that the breakout is our entry. As you can see here, our stop loss is above the range. In the case where you're buying, then you can pick a suitable target for you, right? Depending on your account size. Now, I want to show us this now. Look at this example. Price went up now and went to resistance, came to support like that, kept up ranging, but it did not break out on the upside as we expected. Instead, it broke out on the downside. This is why it is very, very important for you to wait for the breakout. You should not assume. One mistake most traders make is that they make assumptions. Don't ever make assumptions. You have to be as factual as possible. Work with facts and figures and understand what the market is saying. Like in this case now, it didn't follow what we were expecting. It broke out on the downside, telling us that this is not a rectangle or a channel pattern. So it broke out on the downside, right? So if you want to trade, you can trade this breakout on the downside, although there's no much guarantee that it will go down. But if you decide to trade it, you can ride the market down. If you can observe something, look at this. It went up, right? Came down, right? Went to this point, came down, and went back up, right? Went back up, and the market came down. This thing looks very, very similar to double bottom pattern. It's double bottoms, right? So, but if you want to trade it, you can trade it. This is just an example of a time where it does not go in our desired direction, right? So let me show us one more example so I understand better. Look at this. Market went up here, entered into a range, went up like this, and this placed the root buy signal, broke out in the upside and went up again. The reason we are using this as our target, remember when I was teaching head and shoulder pattern, I told you that most of the time price will always reverse at that point where it first left. Look at this example. Price went down massively from here, This point of reversal, you have to mark it out and keep it, because price must come back to retest that point. Another thing you need to note is that because the market is inside the range does not mean you cannot trade it. The market went up like this now. This rectangle, many people used to make a lot of money from it, because you already know what is happening. Price is trading between the support and resistance, right, in this rectangle. So you can make a lot of money from trading this range. Or you already know the support, you already know the resistance. Once price comes to the resistance, you sell. Once price comes to the support, you buy. And you already know where the market will reverse. Once it comes to the resistance, you sell. Like that, you just continue making the market until it gets to the point of the breakout. Once you have reached this point, if you want, you can bring let's say you bought from here, right, and the market went here, and this was where it broke out. You can bring your stop loss a little bit below, so that when the market breaks out and retest, you can continue riding the market as you're riding from this point, right? You're riding from this point, you can continue riding the market even after the breakout to this point. You understand? So that is all for the rectangle or the channel pattern, right? This is for bearish, this is for bullish, right? Now, the next pattern we're going to be considering is the flag and the pole, flag and pennant, right? Going to be considering the flag and the pennant. The flag and the pennants. If you observe, if you look at this, let's try and draw a flag. Come on, let me zoom this. Let me zoom this. Look at how this flag looks like, right? This is how a flag looks like. A flag is like this, then like this, then like this, right? With like this. There's a pole, right? Then flag is like this. This is how a flag is, right? So now, when we're talking about flags and pennants, right? Look at this example. This is how a pennant is. Price rallies up like this, right? Then price begins to range up and down between the support and resistance. To range up and down between support and resistance. Then there's a breakout and it continues going up. Remember when I was talking about rising and falling wedges, because I know that many of us must be confused now, because it looks very, very similar to rising wedges and falling wedges. Now, the difference between these flags and pennants and wedges is that wedges are reversal patterns, but flags and pennants are continuation patterns. Remember when I was talking about wedges, I said that for rising wedge, market goes up, right? So sorry, for falling wedges, the market goes up, does forms the wedge like this, and breaks out. Wait, I'm not doing this correctly. For falling wedges, market goes down, right? Right? Forms the wedge, and price goes up for falling wedges, right? Then for rising wedges, price goes up, right? Forms the rising wedge and reverses, right? But in the case of flags and pennants, look at this. Price goes up. It looks very, very similar to channels and rectangle for this flag. Price goes up, ranges, and continues going up, right? Or for bearish market, price goes down in this channel, this narrow range here. Then it ranges for some time, and it continues going down. Then pennants, this is for bullish pennants. Remember, price goes up, then ranges like this. It ranges, it begins like price is converging into this narrow range. It goes up, comes down between the support and resistance, forming lower highs and lower lows, right? I talked about lower highs and lower lows, and higher highs and higher lows in candlestick pattern. So if you have forgotten about it, maybe you can go back and rewatch that video to understand, right? So this is just how the diagram looks like, right? So now let's look at our chart to have better understanding. Look at this. This is the flag pole, right? Every flag has the pole and the flag itself. Then look at how price ranges like this before there's a breakout. One major difference between a flag and this flag and rectangle is that if you observe in rectangle, price goes up, right? And it ranges in a rectangle. But as you can observe in this particular flag here, the shape of the rectangle is not straight, right? It's not straight like this. It's somehow slanty, like this here, slanty. So that's one major difference, right? So price ranges in this narrow range and breaks out to continue going up. Why for pennant? Why for pennant? Why for pennants? Why for pennant? Price goes down, then it looks like this. Like this. It ranges before it goes down, continue to go down. So just like that. Look at this example again. Price goes up, then it ranges into this narrow range and breaks out for a pennant, right? Then look at how this flag looks like. See how the flag looks like a bent rectangle. It ranges in this range here and continues going up. So just like that, these whole patterns are just easy to understand. So all you just need to do is to be able to understand them, so that when you cite them in your chart, you will know what is at play, right? Look at this for a bearish pennant. A bearish pennant, see how price ranges here and breaks down, continues going down, right? Look at this for flag. It goes up, right? Price goes up, then it begins to range up, down, support and resist, support, resistance like that, and it breaks up, continue going up. Look at how they're always picking these points where they had this sharp change as I take profit. Then your entry is with the point of breakout, your stop loss is below the flag or pennant. So just like that, the whole pattern is easy. Look at this too, right? Market was going down, formed this pennant, right, and broke out and went down continuously. So just like that. So once you are able to understand this concept of flags and pennants, you will be able to identify them and be able to make trades on them. Then the last chart pattern we are going to talk about under continuation pattern is the triangles. We have three forms of triangles in forex trading. We have the symmetrical triangles, we have the ascending triangles and the descending triangle, right? Now in symmetrical triangle, price is converging into a narrow range because price is making lower highs, right? Lower highs, which is this, and higher lows, which is this. Remember, I talked about higher highs, higher lows, lower highs, and lower lows in candlestick trading analysis, right? So for this one we just finished, pennants and flags, I will give practical examples in MetaTrader app when I'm done talking about this triangles pattern. So like I was saying, price is converging into a narrow range, making lower highs and lower lows. Now, all these flags, pennants, and rectangles, they look somehow similar, but there are slight differences we need to take note of. Now, for symmetrical triangle, this is how it looks like. Now, let's say price goes up, right? Now, unlike pennants where they for pennants, you notice that the triangle somehow slants like this, or for flags, it somehow slants, bent, right? For symmetrical triangles, this is how it looks like. Price rallies up. It's a perfect triangle like this, right? Now, one feature of symmetrical triangle is that price can break out on any side. There's no particular side where price cannot break out in, unlike in flags and pennants and rectangles. Here, price can break out on any side, right? In symmetrical triangles. See some more examples. Look at this. It's a perfect triangle that's in symmetry. Price broke out here, right? Right? So look at this. Another example of symmetrical triangle. Symmetrical triangle. Then for ascending triangle, there is a fixed resistance point that price can't get above. Fixed in the sense that this is how ascending triangle looks like. Let's say price goes up, fixed a straight line like this and like this. So this is the fixed resistance. The fixed resistance. Fixed resistance, right? The price. So price, as price rallies up, it goes up, the resistance comes down, goes up, comes down, goes up, comes down, like that, right? So this is our fixed point, right? This is the only point that it is not fixed. This point is not fixed, right? So price is going up, coming down like this until price breaks out, right? So here price is making higher lows. Look at this point here. This point here is the higher lows. This point here, this is how it looks like for ascending triangle. There's a straight point and there's this. So now as price is going up, coming down, this point it is forming a higher lows, right? Higher lows, right? With a fixed resistance, as you can see, as I told you about, with a fixed resistance. Then look at how price here, price breaks out to the downside, right? Let's look at more examples. Look at these two. Fixed price rallies up, right? Then we have our fixed resistance. Then this point, our higher lows, right? Price goes down, comes up, goes down like that, and breaks out. Price can also break out on any direction in this one too, right? But also remember, in ascending triangle, there's a fixed resistance, a fixed point. Look at this. From 1 here, went to 2, fixed point, went to 3, right? It's rising, higher lows, went to 4, fixed point, went to 5, went to 6, and breakout. The breakouts are point of interest, but it does not mean you cannot trade these other points, this 1, 2, 3, right? You can still trade them once you detect them. So I've talked about symmetrical triangle. Remember, in symmetrical triangle, there's no fixed resistance. Symmetrical triangles like this, right? Why for ascending triangle, it goes up, there's a fixed resistance like this, right? Then we have the last one is descending triangle. So here in descending triangle, there's a fixed support. It's just the opposite of ascending triangle. There's a fixed support, right? Just like this here. Price goes down, meets a fixed support, right? Then just like this, goes up, come down, meets our fixed resistance, fixed support, goes up, just like that, and then break out. It can break out on any side. So just like that, once you understand this, right, you don't have any issue. This one here is an example of what? Symmetrical triangle. These are our lower highs. These points are lower highs. These are higher lows. You understand? I remember I said that symmetrical triangle can break out on any side. So these are just some of the things you um need to understand, right? So now let's go to our MetaTrader app to see practical example of flags, right? Flags and pennants, right? See practical example of ascending and descending triangle, and symmetrical triangle, ascending and descending triangle, and symmetrical triangles. So let's invert my phone so I can have a better view, right? So this is EURJPY. Let's scroll and see what we can form in this pattern. Patterns we can detect in this one. I think we have already talked about this one. I've talked about this one, right? So we're looking for flags. We're looking for pennants. Okay, I think I've seen an example of flags, of a flag here, right? I've seen an example of a flag. So now this is it. If you bring out your my tool here, right? You draw this and this. Remember, this is how a flag looks like this. So look at it, fits perfectly. This is an example of a flag, right? A bullish flag, and price breaks out here and continues buying up. It goes to this point here, right? Price ranges in this point, forms another flag, and breaks out here. You understand? So we have seen two flags. Right? So now is to find the pennant. Is to find the pennant pattern. Like I told you before, these patterns don't always occur. They occur once in a while in the market, right? Let's check. We have checked EURJPY. Let's check EURGPP and see if we will be able to find some of these patterns we are looking for there. EURGPP. EURGPP. Okay, I think I've seen an example, a perfect example for rectangles and channels. Look at this. Price bought to this point, right? And it ranged for this long period of time. Yeah. Price went up here, rallied right to this point, and it ranged. Look at this here, right? After it ranged from support to resistance, support, resistance, support, resistance, support, resistance, like that. Resistance, and there was finally a breakout at this point. And from this breakout, it rallied up here, right? This is a perfect example of a rectangle or a channel. Rectangle or a channel. So we have seen an example of rectangle. We have seen an example of flags, right? I think many pennants, many pennants, many pennants. Many pennants. Okay. This is an example of okay. I've been able to see an example of symmetrical triangle, right? Now look at this. When you draw this, when you bring this, draw this, right? Remember, symmetrical triangles are like this, right? Where both sides are equal, right? Where price can break out in any direction. So we draw this, right? Raise it up, right? Look at it. It matches symmetrical triangle, and it breaks out. Like I told you, symmetrical triangle can break out in any direction. But in this case, it broke out here, right? So we are able to see almost all the examples. It's just few of them that I've not been able to find, which is the ascending and descending triangles. Ascending and descending triangles. Right? Look at this one. Let's look at this. This goes like this. This is a fixed support, right? And like this. Right? And remember our ascending triangles like this. Ascending triangle has a fixed what? Has a fixed resistance, while descending triangle has a fixed support, right? Fixed support. So I think this is an example of symmetrical triangle that breaks up, or pennant, right? So I'm going to stop here, right? I think from the explanation I've been able to explain the various continuation chart patterns that exist today. I've explained flags, I've explained pennants, I've explained rectangles and channels. I've explained the various types of triangles we have, both symmetrical triangles, ascending and descending triangles. So I will advise you go back to your chart and check other pairs. I would have searched other pairs, but I can't because the length of the video will be too long, and I don't want it to be too long, right? So I'm going to stop here. So don't forget to subscribe to our channel and share with as many of your friends that want to learn how to trade for free. In the comment section of this video, there's a link to our WhatsApp channel where you can join and ask any question you want to ask, and we'll explain. Thank you for your time.